Greetings everyone. Happy Monday, June the 8th, 2020. Weekly update for everyone on the stock market, specifically the S&P 500 and what we're looking at, using that as the gauge of the strength of the overall market. Tonight's going to be a quicker update than the last few weeks. The first few weeks of posting all this information kind of needed to get a lot out there, but now that you guys have seen it and heard kind of me walk through a bunch of stuff, we'll be able to go a little bit quicker, take up a little bit less of your time each week. Of course, if you have more questions or want anything more in depth, feel free to reach out to me personally. And in future videos, I'll make sure to address things like that and we can talk individually. So the bull trend is going to continue. It's continued so far at least. So we'll look at the price action. I'm going to show you something that kind of shows the strength along with the daily buying and selling that we kind of look at to see really how the big dogs are trading and investing, to see really how strong things are. We'll kind of look at the update from the airlines from last week, if you were able to get into those. When I sent out the midweek update, you did pretty well. You could have just bought at the close one day and sold at the open and made about 25 to 30% on your money overnight. So that was really good. So we'll look at that. Oh, this is incorrect. This is from last week. Sorry, I did not remove that. But we will give you updated price targets. But the market continued to run today. Doesn't really have anything in particular for this one. We'll continue to look at the optimism and pessimism and just look at that along with the fundamentals here, especially in terms of what the jobs headline showed last week in terms of where we're at with optimism and what kind of society is thinking. And we'll look at all these fundamentals kind of just from a facts only perspective. I've given you guys my longer term views of everything and what I feel inside and the sort of data that I look at. But as I've said repeatedly for the last few months, you trade the price action, and that needs to be the decisions that you make if you're swing trading. So remember, these updates are for swing trading, especially in terms of price action, right? You might have a different fundamental view of an individual company or the overall market for a longer term period, which might mean you do something different than trade the price action that you're seeing today on the 2-hour chart if you're looking at an 18-month time horizon for your investment. So that's why it's always critical to know what your timing is and reasoning for doing things. So that being said, let's hop right into the charts and take a peek at what's going on. Let's go to the 2-hour. Here's our 2-hour chart for the S&P 500 that we've been using for the last few weeks. Of course, here was where we had the big break on Memorial Day. That was the big update for you guys of a continuation up now for the uptrend, and the bull trend continues. We're continuing to make higher lows and higher highs, and they just keep getting exceeded. So as long as they continue to do this, we are continuing up. If we look at the daily now that we can see some better price targets, I mean, we hit this first target that I told you guys about last week, the 3,065, and then the next one was 3,200, and we hit that on Friday, but today we just popped right on up through it and we just keep running. So now, a next ideal one would be the 3,300 mark. And then after that, we don't really have any more points of support or resistance to use from previous price action, which if we continue to make new highs, that's what a bull market is. It's making new highs. So we would have price targets to the downside of great times to buy back in if you close out any long positions, but we wouldn't have any targets of, okay, this might be a potential turning point. So keep that in mind, and especially remember that with these points of support and resistance, in an uptrend, we're using these to limit profits, to take our profits, not necessarily to make short trades, right? This would be speculative. And I'll be honest, I shorted on Friday at 3,200 and it held during the entire day, right? And I told you guys in the last video, I was definitely going to hit that short at 3,200, but I closed out at the end of the day because we've continued up through it and closed above 3,200, right? So that was me making a speculative play here. And we want to use these more so with the trend to take profits, not necessarily to say, hey, okay, this is where we want to reverse it. Now, if it shows signs of weakness at a certain point and starts to stall, you can take then a speculative trade short. But me taking it Friday, that was just completely speculative on my part, and I'm fine with it from a risk reward standpoint. It was 20, 25 points. Not a big deal, especially after, you just cover 150, 200 points to the upside, right? So you're always taking the risk rewards. So let's go ahead and look at the airlines now. Told you guys last week when we had this initial breakout, said, hey, you're probably going to see some pretty strong price movement up for the next few days because when it finally busted out of this consolidation pattern on volume, it generally does so a few days in a row on really big strength, right? So just United as an example, first day was up 15%, peaked around 25% next day, but closed up 11%. And then today was up another 12.5%. All right, so that was a really good money making opportunity. And if you're still in them, you can continue to ride them. Just know where you're happy taking profits to get out. You might see another day, might see another few days, might just kind of start to peak. But generally now that we've had kind of this initial breakout, we would see it'll come back down and retest some old highs maybe before continuing up. But when that happens, you don't know. So just have a kind of trailing stop, if you will. Just know where you are happy taking profits. And if you're already up 40%, never feel too bad about taking profits at 40%. So that's price targets and what we're looking at. So optimism, pessimism, and seasonality, it's the same as we were talking about last week, in that the headlines still remain very bullish, right, in terms of how people are reacting. So we'll kind of jump ahead to this last fundamental piece. Last week that report came out saying that we added 2.5 million jobs in May, which was absolutely stunning, of course, which is why the market shot straight up. The Dow went up almost 1,000 points in the hour before the market opened on Thursday. That response right there shows how strong people still are feeling about optimism, right? Those sorts of stories are continuing to make it pop, and not just pop 1,000 points. That shows that people are still very optimistic and still really want to buy on optimism, because what does that necessarily tell them? That, hey, we were right about our thoughts that this is going to be very short term, and that all of a sudden, even though we're at 40 million unemployed, within a few months we'll be right back to where we were. My thoughts on that remain the same. We added 2.5 million jobs in May, which is huge. Let's say we double it this month and add 5 million in June, which would be another unbelievably record-setting pace. We were losing 4 million jobs a week during the first 2 months of this whole virus, right? So to think that it's going to only take a few months before all the unemployment gets back to where it was, I still don't personally believe. I think people are too optimistic about that aspect of things, but it doesn't mean that they shouldn't be buying into the market, because long term, as long as we continue that trend, that is optimistic and a positive outlook for the market. So that's the jobs headline. You guys kind of see that all the time. And on the flip side of that, right, if we start looking at the data, and I started showing you guys this last week when I was starting to get concerned about the second wave, but also mentioned, what is it actually going to mean? Nobody really knows, right? We are absolutely seeing a second wave in, I think today it was 20 states that are spiking pretty hard, right? Here's Texas popping. Here's Florida popping. California, one of the first ones that quarantined, never really flattened the curve in the first place, popping, right? Overall in the country, we're still flattening it out. But in North Carolina, where I'm at, we saw almost 1,000 new cases yesterday. So, of course, a lot of the debate is, hey, we're seeing all these new cases, but it's because we have increased testing, which I get that, right? You're going to have more testing, you're going to get more cases. The two go hand in hand, but at the same time, it comes from the marketplace being open and the economy being open and people being back out there. And I noticed it this weekend. I went and drove through an area of Charlotte called South End, where there's a lot of breweries and bars, and it almost looked like nobody even cares about this virus anymore, right? They were slammed with people. Nobody's wearing masks. There was not social distancing. Yes, they limited compared to how many people they usually let in, but in terms of quote unquote guidelines, I have no idea what they are. I'm not going to pretend to say that they were breaking the law by any means, but it was not at 50% capacity or anything like that. I'll tell you that. And they were booming, right? And you see that in the workforce too. People are back in the office that need to be back in the office. And I sat in traffic the other day after work at 4:30 because there was rush hour traffic, right? People are just kind of going, oh, this thing's over and we're moving on. And it doesn't seem to matter right now that we are seeing what everybody was fearing in the first place of this second wave, because all the data is there, and the headlines are on the news. You can see it on CNN, but people are still buying these headlines in a very, very strong manner and not caring about these headlines. So as long as you continue to see that, right, people are still very optimistic and there's a lot of buying going on. So along with that, the NASDAQ made new all-time highs today. That's a big thing. We always say where the market closes at the end of the day is where the entire marketplace believes it is valued. So the fact that we made new highs today on the NASDAQ, let's just go ahead and pull that up. All right, so here's the NASDAQ, and we didn't just make new highs, we closed above the old highs today, right? That is a very powerful piece of information. If we just spiked above it and then closed back under it, it wouldn't be nearly as powerful as the fact that it just closed above its all-time highs, right? So everything is still very, very strong in terms of price action. So while I have closed out of my short position that I made at 3,200 on the S&P 500, I have been adding continuously to my longer term next 12, 18 month outlook short positions, right? Selling out of the money credit spreads with options and doing some longer term put purchasing. And that is, I'm fully aware that that is completely speculative on my part. And that is the entire point that you need to take. It's what I started this video with, right? The price action right now is very bullish, right? So if you're shorting, you're wrong from a price action standpoint. And even if the market turns tomorrow and drops 200 points on the S&P futures, yeah, you'll win that trade, but was it a right time for you to be shorting? Not really, based on what we're seeing. Whereas my longer term stuff, that is me being at the blackjack table and making a choice to make those bets. And I am fine if I lose them, right? Because I might end up being wrong and it might not ever even matter that the economy was shut down for a few months and we don't get back to the same employment we were at before and blah, 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 because the market has a mind of its own. I'm fine with that. So just know if you're making those trades, that's why you always know, and those of you that do options with me know I always tell you to make a note card or make some form of information and write it down so that you know exactly why you got into a trade, so that if it's going against you or going with you, you remember exactly what you're doing. It doesn't matter to me what the market's doing right now, right? Or in 12 months, I'll look back and it's either we're either gonna have a pullback that is sizable enough for me to take profits, or we're not. And I'm gonna be cool with it because I know I'm making a speculative play saying, hey, I think we're oversteamed here. I think people are too optimistic about what has happened, and saying that the market is better than it was before we shut it down for 2 months that's not what I feel inside. So just always know what you're doing. So then the last piece I want to look at today is something that I trade with the firm on Wall Street that I trade with on a daily basis. But this is called a market on close imbalance order. And basically this is, you can read it right here. It's basically ETFs and mutual funds. They have certain limitations to how often they can buy and sell securities to rebalance their portfolios. And so often they do it either right at the open of a day or right at the close of a day, which means they send an order to the exchanges that says, hey, we want to purchase 1 million shares of Apple at whatever today's closing price is, right? That's what a close imbalance is. So basically what this is saying is this is showing you how many of those orders are buy orders, how many are sell orders, and what the value of all of those are. So today, for example, across the market, there was $3 billion worth of shares to be purchased at whatever price those individual stocks closed at versus 595 million to sell, right? So 2.5 billion more buying shares value than selling. And we see that going across last week as well, right? All of these days, very, very strong buying. So the fact that we continue to see this is big money continuing to purchase. So that's another kind of piece of evidence that things are very strong right now from a price standpoint. which is really good, but also sometimes puts you on alert, right? When everything was selling really, really, really hard, like I said last week, the old adage is always Walmart or Wall Street likes to buy your fear and sell your greed, right? Now we're hitting the point that for the last few months, people were talking about, oh, is the final bottom in, and are we going to retest the lows, and what about all this economic data? Over the last 2 weeks, because of how strong the price has moved up and we're making new highs and everything, that's not the conversation anymore. Now the conversation is you got big investors that were originally out saying, wow, the market is severely overvalued and we absolutely should not be continuing to run up. They're starting to look, and you're seeing it on CNBC, they're going, we do not understand it, but we were wrong. And the market has proved us wrong, right? There's no conversation anymore as to, okay, are we going to retest any lows, or are we going to drop? It is all, wow, look how wrong everybody got it that thought the market wasn't going to be able to just turn around and make this V-shaped recovery. And that puts me on edge a little bit, just again from the fundamental standpoint that those are the types of headlines that usually accompany when things turn, right? Just like when we were at the bottom, everybody was talking about how far is this thing going to drop? Like, oh my God, this is going to get so bad. It continues to go. There's no stopping it. The floor is going to fall out, all this sort of stuff. And that's when things bottom out. So again, you trade the price action, but all of this fundamental stuff, the reason I put just the facts is it's just to keep in your mind to know where we stand at any given time so that it's easy to understand if something turns, and if you see something happen, you can look and go, okay, what could it have been that caused that? So it just puts me on a little bit more of alert, but that's because of my view of the longer term picture. But it doesn't mean that I'm sitting here hammering shorts on the market every day. That would not be right of me. Right now, with all of this strong price trend, very bullish, especially since we got above 3,000 and we've stayed above it and stayed above 3,200 now, right? Those are going to continue to hold as points of support, and more often than not, when it's going to run out of steam to the upside, it's going to show itself first. It's going to show some initial impulse selling, and then we'll kind of creep back up towards the highs, and then we're going to see some more selling, and it's usually does not just go from straight down to straight up and straight up to straight down, right? We see some stuff kind of stall out. So hopefully that helps. Is good information for you guys today. Be smart with the trades that you make. I would love to see this market just never go down again. That would be awesome for everybody involved, retirement accounts, my parents, everybody. It would be great. So make your trades wisely. Have a great week. We'll update you if there's anything new going on, but that's about it for today.